So we will wrap up this morning with a power panel that will be discussing the role of FinTech, InsurTech, and Regtech in boosting resilience and operational excellence of financial services. And you are in for a treat because we have another powerful lineup of business leaders and subject matter experts from the financial services sector joining this panel. So our first guest of this panel has over 30 years of experience in banking and finance, focusing on areas of risk management and Islamic finance. Encik Ahmad Shukri is currently the Chief Risk Officer of Bank Rakyat. And Encik Ahmad Shukri also sits in the National Organisation of Farmers Risk Management Committee. Go Malaysian Agriculture. And also rejoining this panel is the one and only Mr. Kelvin Foo, the Chief Executive Officer of our Terabyte partner, Fundastic. Our third guest of this panel has over 25 years of experience in the technology sector across a wide span of industries, including financial, manufacturing, telecommunications, and e-government. I hope we didn't forget anything. Tan Yong Yin is currently the Head of IT and Transformation for Manulife Insurance. Our fourth guest of this panel has over 20 years of experience as a banking professional. Samir Sharma is currently the Head of Wealth Management for Standard Chartered Malaysia. In his 18 years with Standard Chartered, he has successfully built and transformed businesses across several domains like insurance, lending, payment, retail segments, distribution, and digital banking. And lastly but not least, our panel moderator, Asuhan Aridure, who is the Senior News Editor of Star Media Group. Asuhan was previously the editor of the Star's popular In Tech Pullout until 2005 before being posted to Bangkok as an editor of the Asia News Network. In addition to that, in 2012, Asuhan also formed a Digital News Asia with other technology journalists as well. So this is going to be a really, really cool power-packed panel full of industry leaders. And remember, guys, if you do have any questions for the panel, please do not be shy. We would love to engage, learn, and enjoy this entire process with you. So please do send over all of your questions in the comment section or in the chat below. All right, so the panel is getting ready because Kelvin had to run from the previous Q&A session to get ready. It's not just about Kelvin, no worries. Everybody's getting to know each other, getting to talk to each other so that we can give you a good discussion. So stay tuned and we will be back shortly. Bye, guys.
Good morning, ladies and gentlemen. Thank you for joining us this morning. I've heard that the previous sessions have been very exciting, and so we'll try and keep the momentum going with our session here. As you know, technology has changed a lot of human society. Our businesses, our industries have been disrupted, but they've also given us a lot of opportunities to better reach our markets, better reach our customers, and also improve our own internal operations. And today, this morning, we're going to be discussing how these technologies have transformed the three areas in particular. Of course, there's the financial services market, there's the insurance market, and of course, it's also affected how regulators and how regulation can either hinder or boost these technologies in the market. So I'm not going to go into a long spiel because we've got some very prominent guests this morning, and I don't want to steal their thunder, so we'll go straight into it. We'll start first with some issues that all of us are facing, including in the media, by the way. So I'd like to start asking the questions immediately. I'll invite each panelist to first talk about the industry and the challenges they're facing. Also, what has technology done to disrupt their market and how they're facing these challenges? Let's start with you, Shukri.
Thank you, Sohan. First and foremost, thank you, Starbrick Media, for inviting me for this conference. I'm from Bank Rakyat, Chief Risk Officer of Bank Rakyat. We are Islamic Cooperative Bank. Actually, we are the second largest Islamic bank in Malaysia after Maybank. So we are into the retail space with some exposures on SME and business banking. So the key challenges, I mean, in banking at this moment is for us to be capturing the customer, the new millennials and whatnot. And one of the things is we need to be innovative in getting the products and also to capture the markets. But obviously, as a bank, we are fully guided by our regulators, the central banks, and also we also have our other stakeholders. And also one of the key things is protecting our depositors in when we doing the business. So this is a thing that we need to be careful. And but in terms of the whenever what we want to do, we must take into consideration the protection of their interests also. But again, one of the key challenges is, I think, getting things done at the turnaround time, because I think with the challenge of digitalization, in which the technologies has allowed a faster turnaround time in terms of processing of customers, in terms of identifying the customer needs. So there's something that traditional bank like Bank Rakyat should embrace. And I think all the banks in Malaysia, notwithstanding whether they're going for digital or not, we need to embrace this for our survival. Because in the future, this is the thing that we are looking at, the usage of digitalization, the usage of technology, for example, AI, that will allow a quick decision making. And again, the usage of AI will also, in terms of risk management, I will talk from risk management perspective, it will help in ensuring a very transparent decision making process, coupled with the usage of, I think, blockchain and whatnot. So basically, that's from my perspective at the moment. I think hand over to Aswahan.
Yeah, thanks. I'll have more questions for you about what you said. Yong, can you just give us a briefing about your industry?
Sure. Thank you, Aswahan, and thank you, Star Media, for this opportunity. Good morning, everyone, and I hope all are safe and healthy. So I'm from the life insurance industry, manual life insurance, and I'm from the tech and transformation side of the business. Right. So very similar to what Shukri just mentioned, right? The insurance industry is undergoing a major digital innovations and disruptions. We are slightly behind the banking industry in terms of these digital transformations, but we are catching up. Aswahan, to your questions in terms of challenges and in the context of the life insurance industries and today's topic, I'll just quickly go through a few. One is the ability to deliver innovative products, right, to meet an increasingly demanding and digital customer base, right? So today in the life insurance industry, majority of the life insurance products in general are mostly monoblock products that covers you, for a set period of time, right? It's the same coverage whether you're young, you're single, you're married, with children or retired, right? We need to see. And we are already seeing in the industry life protection products that are more personalizable, customizable, and micro-sized. Life products that adapt to you as you go through different stages and phases of your life, along with features like dynamic pricing. Right, so customer needs, at 20 years old, are going to be very different when they are 40s and when they reach retirement. Second is the ability, to bring these products to market very quickly, and including the ability to navigate, the risk and regulatory compliance landscape, right? So in the insurance industry, just to cite an example, it's quite common, for us to take up to 3 months or more to bring a new product to market, right? This includes time needed to navigate the regulatory approval, and which I think, Regtech, a topic that we're discussing today, will play a very important role. And lastly, the ability to digitally engage our customers, which is, as we all know, especially important now in our current COVID pandemic. And when I say digital engagements, it goes beyond just surface tech implementations. It's more of a question on how we engage our customer through digital means throughout the entire customer life cycle. In the customer acquisition stage, in the customer servicing, as well as customer retention. So that's a brief about the industry and the challenges. Back to you, Aswahan.
Okay, thanks. Sami, your turn. Go for it.
Thanks, Aswahan. thanks to Star for having me here today. Good morning to everyone. So I represent banking as well, similar to Shukri. StanChart is the first bank in Malaysia, actually. I'm not sure if many of you know that. Not first foreign bank, the first bank in Malaysia. Yeah. So that's an interesting fact for you. In terms of challenges, I'll break it into two parts. I'll talk about it from a customer lens and then internally how we look at it, right? So from a client lens standpoint, client behaviors are changing rapidly as it is. With COVID, it has only got accelerated further with limited mobility, people not being able to visit branches, not being able to meet their RMs face to face. That is creating its own set of challenges and opportunities in terms of how do you engage clients, how do you make the processes which were very traditional and paper-based, more digital and more friction-free. That's one big area of work that everybody needs to look at. Another example here would be around fundamentally payments, right? Everything practically is moving digital in today's world. Wallets have become very, very common. And more people are using wallets. And Malaysia has one of the highest wallet penetrations in the country, actually. And coupled with the fact that Malaysia's internet penetration is about 83%, which is among the highest in the ASEAN footprint. That also propagates or basically pushes us all towards understanding the fact that even if COVID would have not happened, it would have delayed the acceleration, but the client behavior to consume everything digitally in a more seamless fashion is something that is here to stay, and this is more real than it used to be ever. That's one. I guess internally, it's about, I wouldn't classify it as a technological challenge per se, but it's more about how do you adapt or keep pace with the rapid innovation. So technology has become a big buzzword, but there's so much that is happening on all sides. How do you really keep pace with that? How do you understand which technologies are relevant, which are more useful, which do you want to really deploy or not deploy for that matter? So it's more about, there's plenty of choice, ample of choice, and how do you really pick and choose the right optimal solutions and then implement them? Because everything has a ripple and downstream impact too, right? Cyber risk is an area where things are changing rapidly. Initially, it was about protecting our clients from phishing and malware attacks, but now even the cyber risks are becoming more tech savvy, right? They are also using AI and machine learning when they attack the banking systems. So how do you really then innovate further and stay ahead of the curve to manage those aspects of the business? So broadly, from a client lens, it's more about how do you adapt to the client's demands and needs, which are becoming more digital in nature. And two, from a technology standpoint, it's more about how do you keep pace with the rapid innovation that's happening around us in the industry.
Thanks. I mean, since you brought up the topic, there's so many different kinds of technologies out there. When it came to your bank itself, how did you approach? I mean, you have to adopt technologies. How did you identify the technologies, and how did StanChart approach to be able to evaluate it? And yours is a live environment. It's not like you can stop operations and check it out. You're still operating as you're testing out new technologies. So what was the processes that you had to put in place to be able to change on the go?
I lost you the last 5 seconds or so, but I got a question.
Yeah, the gist was in the first few seconds anyway.
Yeah, so again, it's a fairly complex, I would say, subject in terms of how do you look at adoption of technology. So picking themes like, oh, we need to get into robotics, we need to get into automation, we need to get into machine learning, AI, that's the easy part, right? I think the challenging part is, what do you do with it now? Do you want to do everything on your own? Do you want to leverage on partners? Which is the best platform to implement? And to your exact point, when you're in a live environment, how do you ensure that you do it in a way where adoption also happens or implementation happens? So we have a multi-pronged approach here, Asan. So fundamentally, we do a few things. As a bank, as a traditional bank, we practically today have digitized all our base operations. So today, as a client of StanChart, you can engage us on the retail bank side and execute any and every transaction you can think of digitally. So keeping the client front and center, we were like, so what do we need to do to ensure the journey is seamless and friction-free? So that whole journey has been digitized. So that's one aspect. Now, is it really best in class? Is it something where we can say that we are like a Google or Amazon of banking? The answer is no. We have digitized, we've made the process friction free. We can allow clients to exchange or rather demand services or solutions from us and execute all of them without meeting us and keeping them safe at home. So basic stuff, right? Then it comes to innovation. So we have our own independent unit called SC Ventures. They help us look at various technologies agnostic of our current challenges by partnering with different kind of FinTechs, InsurTechs, and coming up with new ideas and testing them out in different markets. So they focus on going deeper into the innovation space, right? And leveraging on partnerships where possible. The third area where we have taken a very, very bold step actually, and the biggest one, is about going digital native first or going with digital banks. So you would be surprised to know
could you
that
repeat that? Digital native first, digital one? I didn't hear the last
we have
one.
gone digital native with digital banks. We have launched our own digital banks. So you would be surprised to hear this, but we have about almost 7 to 8 full-fledged digital-only banks running in the Stanchart global footprint right now. We launched a series of digital banks in Africa, which are emerging markets. We launched one of our biggest and boldest digital bank moves in Hong Kong. So now in Hong Kong, we have 2 banks. We have Standard Chartered and we have Mox. They are 2 independent banks with 2 independent licenses. One is our traditional entity. The second is a full-blown digital bank. And that's like an Amazon, where we can do transactions actually in seconds. You can open an account in less than 10 seconds. You can apply for a card in less than 10 seconds. So that is a big test or a pilot we're doing in Hong Kong. We are replicating that in Indonesia and Singapore as well soon. And bringing all this together, then we are looking at how do we now make this an integral part of the bank across the board.
Okay. You brought up Africa, and I'm going to segue into a different topic. I know one of the challenges in Africa for many, many years was the great portion of the population that is unbanked, right? And we do have similar communities in Malaysia as well. Has these kind of new services actually managed to help Stanchart reach out to the unbanked communities in Malaysia? And if so, how active are you in that area?
I'll add to that, Aswan, and give you a slightly more nuanced answer as well. We did a survey about a year ago. Mm-hmm. And as you can imagine, with COVID and the reducing interest rate environment in Malaysia, it's become even more challenging for Malaysians to save up and accumulate wealth, right? Now, couple that to the fact, the survey result says that a significant portion, more than 50% of Malaysians today, who save up for their retirement or save up for building their wealth, do that through traditional savings accounts. Mm-hmm. So it's a double whammy. So one, you go to the most basic kind of savings instrument and the interest rates have dropped to all-time low. So that is how challenging the current environment has become. Now, to your pointed question, how are we leveraging a technology and how are we doing that? So we have launched a couple of digital initiatives, one on the advisory leg, and this is specific to wealth, and 2 on the execution leg. So we went ahead and launched something called Smart Goals, which is basically a goal-based platform. So as a client, you don't have to worry about advice in terms of trying to understand where to invest, what to do. You can invest and start your journey with as little as 200 ringgit. So it's accessible to everybody. And the goal or the portfolio design is exactly using the same algorithm or logics that we offer to our high net worth clients today. So there's no differentiation. If you want an advisor to meet you face to face, well, you have to be a high net worth client because there's a cost to serve. But now we're bringing the same service, leveraging on technology to anybody and everybody who can just go to the SC mobile app and choose a goal and invest. So that's one thing we've done. Now we have built on that through this year, wherein we have started offering advisory virtually as well. So every Saturday at 11 a.m., we have a virtual advisory session that runs for all our clients with no discrimination or selection to say this is only for high net worth, nobody else can come. It's open to anybody and everybody. Every client can dial in, they can listen, they can ask questions, they can take feedback. And I'm really happy to share that almost 50% clients who come in there are not wealth clients, and which is what we see in the general behavior of people. They have been investing on savings instruments. So these are two areas, or these are two ways we have started leveraging technology to reach out to more and more people on the mass and mass affluent space.
Oh, thanks. Yong, you brought up millennials and Generation Z, or Z as the Americans would call it. And, personally, a few months ago, I had to renew some of my insurance policies. My kids are grown up, but still dependents. And, so we had to go through. And as usual, it's always a problem trying to understand the nuances of insurance policies. And I'm used to it because I've done it before. Signed up for policies when I started. But for a lot of young people, it will be their first time wading into this new world, they would call it adulting. Do you think you can tell us about how technology and, your adoption of technology has helped to young people navigate around this? Because it's a very complicated world, insurance. Yeah.
Sure. Thanks as well for that questions. So as you mentioned, how do the millennials, the Gen Z, Generation Z, navigate this complex world of insurance? For the longest time, there's a saying in the industry that insurance is sold and not bought, right? Because of the complexity of the insurance. And as I mentioned earlier, insurance products have been, for the longest time. In general, still today, it's a monoblock type of products that covers you throughout your whole life, right? For that matters. And a lot of features are built into those type of complex insurance product. I think for the coming generations, the more digitally enabled generations, we need to start to innovate towards smaller insurance products and micro-sized products that's going to be able to grow with the generations as they go through different phases of the life, right? So a young kid straight out of college, their first job, will have very different needs compared to someone that has a family, have their own children. The needs for protections will change, right? So today, we sell a complex products to a young children or young kids, right? With all this complexity built in, it's going to be very difficult, for them to understand, what's coming 10, 20, 30 years down the road. But if we are able to customize the products to their needs, right, and have that products grow with them, throughout their life phases, right? And in this, I think AI, big data and data analytics will have a big role to play in providing that insight into the customer journey, right, and be able to tell them that you reach a different phase in the life, which you consider to add on to your products, right? So we need to see, as I mentioned earlier, we are already seeing some of these products coming into the market, but we need to see more of this type of personalizable, customizable micro-sized products that can grow as the customer grow the different phases of their life.
All right, thanks. Shukri, back to you. We've not been ignoring you, don't worry. So, we've already spoken to Stanchart, and for you over at Bank Rakyat, your area is risk management. Can you describe to us what any particular challenge? Because Samay has covered some parts of the overall banking environment, but in risk management itself, how has technology affected or influenced, or how you all approach risk management in the bank? And what kind of technologies do you think you can talk to us about? What kind of technologies are you leveraging to solve these challenges? Oh, sorry, your mic is off, Shukri.
Okay, sorry.
Yeah, there you go.
Thank you. As you can see, risk management is part of the business also in that sense. So we are enabler to make sure the bank are taking the prudent risk taking in all their activities. So in that sense, when we looking at making, for example, assessment to the customers and whatnot, we need to be using the technologies to make it more smooth, to eliminate any potential of mistake and whatnot, and also to one good thing, especially on retail, is the turnaround time. So if the current normal process of assessment and control will hamper the turnaround time, then it's something that we will be lag behind of other players. As Samir mentioned, how StanChart already having their digital banking and whatnot. So that's a thing that we are looking from our perspective in managing risk, but without hampering the process flow, the turnaround time of the businesses. So one of the tools, like I mentioned earlier, is using the AI for decision making in that sense. So that we can actually manage our risk, at the same time allow the quality products and the quality customer onboarding to coming to us. But of course, it's a challenge, because when you talk about having AI, or now have to relate to big data or this thing, because we need this kind of data and whatnot to actually come up with the AI mechanism, for example, maybe up to the stage of cognitive level or whatnot. But it is a challenge to do this. Of course, certain organizations are a little bit more mature compared to us and whatnot. But when we talk about risk management, this is a thing that we need to have it. It's something we have to embrace. You cannot go to the old ways of waiting to do a lot assessment one day to do numbering. Even the scorecard that we use now also might not be more feasible in the future, because how fast the data change, So because when we do, for example, the process of using a scorecard scoring is using historical data. The mechanism is using historical data. You don't use future data or whatnot. So I think in the digitalization world, in the fintech world, the dynamic of the data is very important, because people behavior, customer behavior can change. So we cannot be using the old approach of using historical data in totality. You have, that's what usage of AI will combine historical data and the future data to become as a start, as our predictive model in the AI, and maybe subsequently to tailor-made to the customer need, but without sacrificing the asset quality, the repayment, if you're talking about loan and financing. But again, looking at this, maybe you have that question about regulation, but there is a process also from regulation to that we have to face. But maybe I'll leave it for your next question on the regulation.
No, in fact, you can answer right now.
Maybe from when we go into these fintechs or whatnot, because I think the normal fintech, they are only still don't have the main control like Bank Negara have on normal banks or whatnot. So one of the things that we look at when you go for fintechs or digitalization, especially when you do AI up to the level of cognitive, this is very advanced in that sense. But in that process, when we, for example, cognitive, where you tell the customer, this is what's suitable for you. You get this product, this thing, we tailor-made already. But in that process, in the regulation, there is a product approval process that we need to go to the central bank. Yep. So we go for the current process where you have to take time, submit, and the thing is, and in the fintech world, it will not be, it will not hold, it cannot be that way. You must have it's like very dynamic. Immediately you come up with certain product or not. You cannot wait for the process of getting approval for regulation, all these things, and you will be left behind. If you one day late for under fintech, what I envisage will be late already. So when we do this, there's something that the central bank or the regulator have to consider, how to still impose a control, but allow all this technology or all these dynamics to be in place. It's a challenge balancing between this, but again, at the end of the day, how you want to manage it. The validation, maybe it comes from validation or the AI itself. That means you have to validate the AI that you come up as the control rather than per product per se. So this is what I can see. Area, for example, product approval will be a challenge if you want to follow the current process in this fintech world.
Okay, thank you. Kelvin, I'm going to do a pop quiz question on you.
Okay.
Because since Shukri has brought up future data, which is very nice term. I mean, Shukri, are we talking about predictive technologies here, defining patterns?
Yes.
Kevin, can you, I know this is out of the blue, out of left field here. Can you tell us how important such technologies are going to be in the overall, not just banking, but also in insurance, in the everything fact world, where financial services and all these companies are looking for? Because your company operates around these edges, these edge technologies as well. How important is it going to be for you? And how important is reaching out to the younger generation, moving into adult life and having all these concerns that give us all headaches, but they're new to it? How important are such digital technologies going to be to approach these markets?
Okay, firstly, I think to answer your question about younger generations, I think the younger generations are the one that's going to pick up these things the quickest because they are already exposed to digital technology. So I think the issue is more on the senior ones, right? But in terms of
the hair, the color
yeah,
line, right?
I'm not going to say anything. But anyway, the one with the in terms of predictiveness, in terms of technology or AI that predicts future outcomes, I'm going to probably just narrow it to our financing or digital financing or fintech, right? Definitely, it's really important because currently, we, like what Shukri mentioned, there's no technology at this moment in time that's used by traditional FIs that's predictive, right? Everything's still very historical credit data. So, for example, if I have zero credit history, I do not have a credit card, I don't even have a credit card. My business do not have any facility with the banks. If I go to any of the banks, they say, sorry, I can't loan you any money, right? So where does this come in, or where do alternative data comes in, right? Apart from just credit data. So like for example, P2P or Fundastic, we actually do use alternative data for some of our products as well, in terms to basically provide financing for businesses or micro businesses that have zero credit history. Where, just to answer Samir, or to add on what Samir mentioned about, in terms of technology, do you do everything on your own, or do you work with, partners, right? So being a startup, being a fintech, a small company, it's always best to look for innovative partners to work with, right? So for example, the one I was talking to you about, using alternative data, is basically working with a very reputable e-commerce platform in Malaysia, right? So what we do is with Open API now, we can actually link directly to them, and if there are any online e-commerce sellers who needs some sort of working capital financing or loan, however they got zero credit history, what we can do is then use transactional data or basically their historical data plus the turnovers with the platform using third-party verified data, and then with that information provide some sort of financing for them, right? And also with this data, we can actually use like for example AI or any technology to predict their turnover or their sales in the next 1 year, 2 years, 3 years, to determine the cash flow for these businesses.
Okay, thank you. So you did mention, and Shukri brought up the issue as well. Yong, let me go to you first here. How do you approach, because everyone talking, like Calvin said, digital natives are not the issue. They're already used to this, using tools like this. Unfortunately for the rest of us, especially big organizations and institutions, how do you approach the talent issue? What do you have to put in place, or what have you guys put in place to be able to nurture the internal talent then that can adopt these technologies, can make full use of them? And for you, do you do a combination of internal grooming and working with partners outside? And can you tell us the factors that weigh into those kind of decisions?
Right. Okay, thank you, Hassan, for the question. So I guess you're referencing to our internal talent here, right? So yeah, so we take two approach here in terms of grooming talents as well as generating ideas and into innovations. Internally, we look at and identify technologies that will help us in our digital journey. Technologies itself, like what Samir mentioned earlier, is just an enabler, right? So we have to look at the outcome, and then we look at technologies, and then we create a safe environment within the company, for our talents to be able to, look at where we want to go and look at what technology is available and be able to experiment and innovate, within the company. And it has to be a safe environment, so that if it doesn't work out, Samir mentioned that there are a lot of technologies out there. If it doesn't work out, we are able to fail fast, recover, and pivot very quickly. Because as technologies emerges, it will be very hard or very difficult to pinpoint which would be the technologies going forward. And we have our I will cite examples. We had our own failing as well. But I think it's important for us to take those failings as a stepping stones to the next level and groom our talents to be able to adopt and learn and grow them. Second, just I'll talk about internal. Externally, we have this program called Boost that we partner, fund, and support the startups, the FinTech startups. So through these programs, we're able not just to fund them, as I mentioned, right, but partner them and bring those innovations to market. At Manulife, we understand that great ideas, great innovation doesn't just happen within Manulife, right? I mean, there are a lot of very great ideas out there, and we want to be able to nurture and bring those ideas to market. So we partner and fund them. The Boost program that I mentioned, that's ongoing as I speak.
Oh, thanks. Samir, let's go back to you. I think most banks as well have something like this, an internal team that fools around with technology while making sure that your core systems are shielded from such playful endeavors. But let me ask you something as well. A few years ago, I remember speaking to a banker as well, and he said one of the issues that he was facing was that there are all these digital natives coming out, and we have right now a very vibrant startup ecosystem in Malaysia. And the first thing they want to do is join one of these sexy Calvin type companies, right? Something making. Have you faced the issue of trying to attract new talents, especially young talents? And how has Stanchart approached this? How do you convince people to join you when there's so many things exciting going out there, and they think, most of us look at the banking and insurance, I'm sorry to say, sectors as very stodgy, old-fashioned, not exciting at all. How do you get these exciting young talents into your organization?
That's a great question, Hassan. Before I get into that, so I want to dispel another small myth.
Go ahead, please. Tell me where I'm wrong.
No. So there was a point around adoption of technologies around clients, and is it fundamentally the Gen Z versus the older generation, depending on how you define old, do they adopt or not? My take on this is slightly different. I think clients are very much open to adopting new technologies as long as it is easy and friction-free. And that's a key, right? How do you look at the technology? If you look at it inwardly, obviously you think you did a great job, but the client is struggling to go through from one step to another, the adoption is going to be low. So a simple example here would be with acceleration of the technology adoptions or the need to do that owing to COVID. Today, 80% of our investment transactions across high net worth clients who generally are a little older in age is happening non-face-to-face. So client adoption, in my view, is not a real challenge. The challenge is, are we doing or putting the right kind of processes which are more seamless, more easy for adoption? Are we making it intuitively easy to get the journey going for them, right? And that is fundamentally linked to the question that you raised. How do you internally work on that? What do you do about it? And here, what we have done, and that also answers your question about attracting talent to some extent, is to make things exciting and fun in many ways, right? So new ways of working. If we don't collaborate, we try to do everything on our own, we try to reinvent the wheel, that's more challenging and more troublesome. So collaborating is key. Getting into an agile way of working is key, that you're fast, you're rapid, you're quick in getting things done. So training people on that. Exposing employees to different mediums of learning. Let be classroom-led, let be going through Readiness of the world, Persepios of the world, and we've enabled all those platforms for all of our employees to learn and gain more knowledge. This becomes very important. Now, couple this with the kind of partnerships we're doing and launching banks like Mox in Hong Kong. Couple this with SC Ventures, which is our only tech entity which goes out and innovates without thinking of the traditional bank. And that then suddenly becomes so exciting that if you look at us, you're not looking at joining a traditional bank, you're looking at joining a very vibrant organization who helps you not only understand banking in the true sense, because we have the depth and experience being practically the first bank in the country, but we also give you access to the latest innovations happening in the digital world in a safe way, into a learning, exposure, experimenting, and trying and failing. Along with that, we also run certain programs for new hires. So we hire people at different scales and different levels. So we run different kind of programs for fresh graduates, people with less than, say, 3 years of experience, but not from the industry necessarily, to come on board. And we take them through a program which is very structured over a period of 6 to 12 months, post which then they're deployed in different areas of the bank. So I would argue it's a pretty fun and innovative place to be. Yeah, banking is not boring, not yet.
Okay, thanks, gentlemen. We've actually got quite a number of audience questions as well, and they're asking better questions than I ever could. So if you don't mind, let's go to our audience and I'll start asking some questions here, right? This is for Shukri and Samir. You both might want to have a stab at this. Will the adoption of digital technology help you guys in reducing the incidence of fraud cases? This is a question by Mohammad Azan. How do you, because especially in the last few years, the number of fraud cases that have come up, and scams and loan scam issues and all that. Can you just give us a brief on how these new technologies can help you reduce? And I would like to start with you, Shukri, because you're in risk. So we'll start with you. Okay.
This is something that I've been looking at, studying on personal basis also. Actually, one of the tools, technology is blockchain. Okay. Because blockchain is a sort of a ledger or the thing. And the usage of blockchain will alleviate the decision-making process, in terms of provide transparency, and at the same time, we will be able to reduce fraud, money laundering, and also address the integrity issues. Because maybe I'm not a techie, but basically blockchain, each step of the transaction there is an authentication process, to validate the source and the thing. So the usage of blockchain, you can trace back the source of funding and whatnot and the process of this thing. So it's very important that the contribution of blockchain, that's something that we should invest to help us in this more challenging world. So I can say it's blockchain, but I would not talk a little bit more detail because I'm not an expert, but this is something that for us, the technology that really help in terms of managing primarily like fraud or whatnot, because fraud can be coming from, nowadays, you can have a variety of fraud type. So this thing, internal collusion and whatnot. So this process eliminate, and we will cut short the verification process, because you cannot interfere on this. The information is there and it's been authenticated. So that's my comment on that.
Thanks, Samir.
Yeah, I agree with Shukri. And the answer is yes. Yeah, technology definitely will help, and I guess that's not an option anymore. In terms of phishing attacks, in terms of ransomware attacks, it's on the rise, and the so-called cyber criminals are also becoming smarter and leveraging technology to do that. more than before. So using the right kind of technology platforms to safeguard the systems is critical, and that is an area where we are investing heavily. The second area, though, we're also investing in is increasing the level of awareness by educating both the clients as well as the employees of the bank itself. Because a lot of these attacks, they fundamentally are on the fringes. They don't really go to the core system directly. They are able to penetrate because they're able to take benefits in terms of identity theft and stuff like that by getting access through either some employees or through some customers, right? So there's a huge amount of investment that we're making consistently and continuously, because it's an evolving area, on educating our own employees on how do you read and manage such phishing or ransomware attacks and be aware and alert in managing them, besides implementing technologies in itself to protect the banks.
All right, thanks. This question goes out to Yong. It's by Karina Noor. Can you just give us a brief rundown of, have there been any new products or services to address the impact of COVID-19 on people, patients, and their families? And what do you see your challenges moving forward? Because this pandemic is going to be with us for some time. For insurance.
Yeah, sure. I think COVID-19, this pandemic, sort of caught the industry unprepared. If everyone remembers when this pandemic started, the world and the insurance industry, is trying to make sense of what to make of it. In general, in the past, pandemic-like type of is not covered, generally in medical insurance. But I think the industry, together, with the regulators, have come together very, very quickly to put, money and support together to be able to fund, coverage for COVID-related treatments. So I think we will see more of innovations towards this space. This COVID-19, as the audience asked, will be with us for a while. I'm sure we'll see products coming to address coverage for this type of illness or virus type of illness.
Okay, but has there been already new products or new add-ons to existing policies?
Yes, they have been in the industry, but generally, I think in Malaysia, they are often limited by a sum, right? There's a cap limit for the company, because I think industry is struggling, like I mentioned, to make sense of how wide or how long this pandemic is going to go.
Yeah. Okay, thanks. And Kelvin, back to you, because you brought up, and we've got a couple of questions around alternative data, right, from different members on the side. So one of the questions from Jeffrey Liu, where does alternative data come from, and how do you verify those data? Al-Walid Low is asking, how effective is alternative data? Right, and and do you mean alternative screening for file cases? But mainly, how do you define where does alternative data come from? How do you verify it? And how effective has it been?
All right, good question. So on alternative data, it's basically, basically data that banks are banks currently not using. Banks are still heavily using like credit data. So alternative data will be data from, different partners. Like for example, just to be more localized, you have your Grab, you have your Shopee, you have your Lazada, which all have plenty of data in terms of the SME market, right? But how are then financial institutions or insurance company working together, collaborating with these businesses to then get this data and then use this data to then basically to get a better predictiveness in terms of let's say for loans, right? I think the reason, the important thing about alternative data is really to help the current underserved markets, right? markets that businesses or individuals that currently have very, very slim credit history of slim credit data. And this is where alternative, I mean, it's an alternative, right? The word alternative. So it's an alternative tool that can come to complement or assist the current banking ecosystem already. So yes, I mean, that's how I see alternative data coming into play. I mean, credit history, credit record is still very important. I think it's still very key in terms of for the banks to use in terms of evaluating. In terms of, sorry, your next question was
verify. Yeah, how do you verify?
Alternative verification. Yes. So I mean, I think everyone knows the country is moving towards digital, right? So which similar to the banking industry. So that's where, for example, eKYC, like Regtech, like eKYC or digital signature comes into play. I mean, I can speak on my experience because Fantastic have both eKYC and digital signature services. And with this alternative verification, it basically speeds up the process in terms of the onboarding and the disbursements of loans, for example. Of course, being in a regulated environment, I mean, we are also regulated under Securities Commission. We still need to, we need to be as seamless as possible for our customers at the same time, keeping that, regulatory framework in place in terms of fraud and credit risk, right? So this is where balancing using eKYC and digital signature from the traditional methods come into play. But for example, but just to share a little bit more, I mean, Fantastic have always been using digital signature for all our loan or funding contracts, and these digital contracts have already been used in the court of law. We've already determined, we've already gotten judgment order for loans that went bad, NPLs and things like that. So just to share maybe the banks and insurance that there is a precedent set already in the country for digital contracts.
Okay, thanks. Now, this is a very generic question. I'd like to hear all the panelists in it. How do you, we've talking about the younger generations and how they have no issues with adopting digital. But one issue that we all need to improve upon is financial literacy. Can you just tell us how do you approach financial literacy and what do you think can be done to improve financial literacy in this country? Not just for the younger generation, but especially for them, but for everyone else. We'll start with you, Shukri. Can you just share some insight if you have any? I know it's
okay.
Question.
Okay, basically, financial literacy boils down also to the organization, for example, in a bank or whatnot. As far as Bernegara is concerned, they already have in place for a couple of years already responsible financing guideline. So this is a start from the bank side to ensure when we onboarding customer, we make sure they are actually capable of paying their debts or whatnot. So that approach is very dynamic, ongoing process. Then when come for financial literacy, we have to use that tool to actually make sure customers are aware when, for example, they are not being approved or whatnot, is because we also want to help them not to be in debt. So that's a key thing that we have to understand also from that perspective. So of course, this is very ongoing process because people will always will sometimes forget of that the need to be more prudent and whatnot. So it's both efforts from the customer perspective and the organization perspective to keep this process ongoing. But a start, like I say, is the bank that we need to practice that rather than just giving whatever financing or whatnot. But we have to be very prudent, careful to ensure the customer that only eligible, because sometimes customers they always feel they're eligible at all time. So that's, I think, from my perspective.
Thanks. Samir, Shukri, being from the rest background, of course, spoke about prudency and being prudent and making sure the customers understand what they're getting into, right? Can you, if you want to add to that, you can as well. But I would also like to approach Stanchart being a commercial bank and all that. Financial literacy can also include how do you best make use of what wealth you have, right? Can you talk about that and how digital technology can help, and what StanChart itself is doing wrong, you think?
Sure, sir. So specific to, and the question was more about the slightly older generation, and you're right, it's more linked to
Actually,
how do you manage
it's also the younger generation who are very digital savvy, but perhaps not financial literate.
Yeah. So how do you really save and how do you accumulate your wealth, either for your retirement needs or for child's education and otherwise? As I was mentioning earlier, one of the biggest challenges now we face is the extremely low interest rate environment, which is going to stay for some time longer. And that impacts your ability to save significantly as it is. Now, couple that with the fact, again, I was mentioning the research we did earlier, that almost 50% plus Malaysians, when they save today, they put their money in traditional savings accounts. They're not really investing. There's a big difference between saving and investing, right? So effectively, their wealth is only degrading because of inflation, net of it, it's not growing. And that's a big challenge. I'll add another component to it, which is slightly different, but equally important in the context of Malaysia, which is this. And COVID has only made things worse, again, from a mortality standpoint. Most Malaysians today do not even look at will writing as a necessary requirement in terms of how do they plan for the transition of their wealth. Insurance part of it again, in terms of replacement of income. These things are very, very basic. And the pain that you would face if you don't plan for it well is unimaginable, right? Either by not saving up enough, and there is again enough stats, enough research, even done by government agencies quoting that most people who retire, salary people who have EPFs, it would not last them beyond 5 years of retirement, which is a very scary number. And that I think now would get more accelerated because a lot of people have withdrawn their EPF savings over the last year or so. So taking all these facts together, it's a pretty precarious situation, actually. Now, as a bank, high net worth clients obviously are managed better because they have access to advisors, they can talk, they can plan. And the challenge is not really about advice only, it's about excessive advice. There's so much information, right? How do you sieve through the information and help them do it in a more simple and simplistic manner? And that is where we have invested heavily on digital advisory. So this is accessible to anybody and everybody. So we can send you weekly advisory write-ups, which are very simple and layman, which answer client questions the way we are talking right now. So basically, they're framed as client questions every week, and everybody and anybody can read them. And that's accessible to everybody. We run virtual sessions for clients who want to ask us more questions on a weekly basis. Besides that, we have our goal-based platform, which fundamentally helps you invest based on your goals. If you say, I want to retire, and you believe you're going to retire in 20 years, that's all you need to know to begin with, and how much money you can put aside. We'll help you with the rest. We'll help you with an allocation basis your risk profile, basis the tenor, basis the money you can put aside in terms of what kind of investment should go into what kind of underlying instrument. You don't have to worry and think about that, right? So we'll do that for you. And that today was access only for high net worth, which now we have brought down to anybody and everybody. And it starts at as little as 200 ringgit. So nobody can come and say, hey, I don't have money to save. All you need to do is start putting aside 200 ringgit every month to build up your corpus in a structural fashion, in a disciplined fashion. So these are the areas where we're focusing in a big way.
I would actually love to explore financial literacy more. Yong, did you want to say something? No.
Yeah, sure. So perhaps I'll touch on a different aspect of financial literacy. So we have heard from Shukri and Samir in terms of digital and outreach. I guess one area that we need to look at is financial literacy from young, right? I think the industry need to come together, with the regulators, to start to instill financial literacy in schools, right? Even at the school stage, this is where you learn. And it's very important because today I'm talking from an insurance perspective in wealth protections, right? Less than half of Malaysians have adequate coverage, right? And that's critical, right? So how do we improve that? And I believe educations from young would be a good start. In addition to what Shukri and Samir mentions earlier, that's probably one aspect that we should not forget is our young children in school.
Okay, thanks. Yeah, that's That's what we should be looking at. Okay, gentlemen, we almost run out of time. So I'd just like to quickly dial with my finishing question. We'll start with you, Kelvin, but everyone else, I might ask for wrap up as well. What can the government or policymakers do to help bring us along this digital transformation, or to see your industry's transition into the new area? What kind of policies do we need to have put in place?
All right. I'm going to speak just to touch on your previous question as well in terms of financial literacy and education. I think the government and regulators definitely needs to play a strong part in terms of growing the financial literacy of the country. I think that's. I don't think the private sector can do by itself. I mean, we all have our own educational programs and things like that, but I think the government still has a strong position to play. I mean, the reason why I say that is because, I mean, in terms of what Samir mentioned about, accumulating wealth with the low interest rate environment, actually there are a lot of products now that is in a regulated environment that offers very high returns under the purview of Securities Commission. You have your digital assets like cryptocurrency and Bitcoin and Ethereum are all, So, and also P2P as well. We are also a regulated platform under Securities Commission, and we offer an average return of about 10% per annum, right? So it's actually much higher than what bank savings are giving. It's just that in terms of the regulators and the government, is how do they actually educate and promote these new alternative or new investment vehicles for the public to accumulate their wealth, right? So that's where I think the government can come in to assist. I mean, they are already playing a part in terms of digitalizing. I think with the COVID pandemic, I think the acceleration of digitalizing the nation is definitely a priority up there in the government. So I just want to share with you something that the government have actually done since 2019, where they announced the My Co-Investment Fund, MySIF, where they actually co-invest in P2P and ECF. So, we are a crowdfunding platform where, so basically they invest in a ratio of 1:4. During the COVID, it was increased to 1:2 in terms of government funds to private funds, co-funding to help SMEs in terms of their financial access. And yeah, that's very helpful. I think they've already done over 100 million ringgit in terms of disbursements to government funds. But in terms, I mean, just sticking on my industry, I guess that Samir and Shukri and Yong can talk about the insurance and banking. So in terms of the P2P industry or the FinTech industry, definitely I think the government can look into tax incentives for the public to be more involved in the FinTech industry, in investing in maybe, like, for example, P2P, you are actually sort of helping the underserved SMEs grow, right? So you are actually, sort of investing in the debt of SMEs. So how can the government then provide some tax incentives for investors to help these businesses as well, right? But yeah, overall, I think education, awareness is still financial literacy is still key, and I feel that the government has a big part to play.
Okay, thanks. Shukri, would you like to add to that? In a general.
Sorry, Shawan. My word is speed. Talking about speed from the players and speed in the regulators. Because in this kind of digital situation, the old way of making decisions and whatnot from both angles, it does not hold water anymore. We need to look into this. Not saying that I'm not looking or not looking at it, but it's something that everybody needs to be doing on the same thing. All right.
Thank you. Yong, would you like to add?
Sure. So speed definitely should be. But in addition to that, I think the government regulators needs to keep an open mind on innovations, and not just keeping an open mind, but push the industry to innovate further. Ban the government initiatives like the financial regulatory sandbox. I think that's a great steps, but I don't think we're using it enough, right? As Kevin mentions, the government, the regulators, need to push, incentivize, and get the industry more involved in innovations, as well as support for more innovative products. Like micro insurance that I mentioned earlier. I know Shukri also mentioned the challenges of getting product approval, right? So be more open and supportive in that area would definitely be great for the industry.
Okay, thank you. Sami, you get to wrap up everything. We say goodbye.
Well, I agree and echo every sentiment, every message that has been given. Yeah, so it's all about how do we accelerate what we're doing and increase the speed, as Shukri mentioned. So there's a lot of work that's being done by the regulators in putting the blueprints in the right way, looking at digital banks, sandbox, and stuff like that. This is fantastic. I guess I'll just add another word with collaboration. How do you work more closely, not only with the traditional players, but also with the FinTechs or the tech companies on leveraging different initiatives like data? That's a very overused word, but today, to Calvin's earlier point, we leverage on data in bits and pieces because of the limitations on what we can or can't do. So how did today a bank take an insurance company's data as a partner and work together to build better models, which are not looking at only credit risk, but also taking into account lifestyle risk in terms of providing better insurance covers and so on and so forth. So collaboration and speed together, and education definitely is high on the agenda for everybody, which includes industry players as well as clients. Putting that together, that'll be fantastic.
Okay, thank you. Thank you, gentlemen, for joining us.
Thank you.
We're going to say goodbye now. Thank you to the audience.
Thank you.
For asking some very, very good questions. And I apologize to our audience that I couldn't get to all your questions in time. And so until we see each other the next time, hopefully the pandemic would have been lifted and we'll be exploring even more exciting opportunities. Thank you.
Thank you, everyone.
Thank you.
Thank you. Stay safe.